Bill Gates. He's the second richest man in the world with a net worth of $102 billion. The interesting thing about Bill Gates that not many people know is yes, he generated a lot of that wealth through Microsoft, but also through being an extremely savvy investor. What I've done is I've gone through and I've studied the way Gates invests to make such a vast amount of wealth. There's been 6 key rules that have stuck out to me, and I want to show you them now.
Are you and Melinda and your investment chief, Michael Larson, as focused as you have been on generating returns so that the foundation has more money to give away? And for that matter, your private investments, or is now a time to think more about capital preservation?
I'm bullish on the U.S. businesses and global businesses. So we're not in some defensive posture where we're mostly in cash or anything like that. The strategy that's been used on the investments is to be over 60% in equities, and
that's still the case?
No, that's still the case, and
even after a 10-year bull run?
Well, yeah, you can. Well, calling market turns is a very tough thing to do. You can make the case that the yields aren't very high, but that's true across all asset classes. I mean, T-bills at 10-year, well less than 2%. So there's no obvious thing to beat other investors out there, and there's reasons to think absolute returns for the next decade will be less than they have been for the last several decades.
Apple is the largest company in the world. Can Microsoft catch up?
Well, it's amazing how well all the top technology companies are doing. Google's doing well, Apple's doing well, Microsoft's doing well. It speaks to the fact that the digital revolution has just begun. I mean, we're getting onto your wrist now. We're going to do robots. There's all sorts of ways that the software revolution is just starting.
When I met Bill on July 5th, 1991, I think we probably spent 10 or 11 hours talking.
Yeah, 2 things that I picked up after meeting you. Bridge was one and golf was another. Yeah. I was never a good golfer, and it was an excuse to talk. It certainly wasn't about golfing. Whenever I see something, take these very low interest rates, even negative interest rates, I'm always thinking, boy, I'm looking forward to talking to Warren about that. One thing that's fun is you have a very optimistic view about things.
I think if I'm a sort of neutral in terms of optimism or pessimism, and I look at the facts around me, I look at what has happened in my lifetime. Put 3 of me end to end, and you're back before the Declaration of Independence was written. That progress in 3 lifetimes like mine it's mind-blowing.
Since I've known you, you've always been good at taking finance things and making them simple. Do you think that came naturally, or did you learn over time just answering questions about finance decade after decade?
I started teaching a course when I was 21 years old at the University of Omaha. I did that because I was terrified of public speaking earlier, and I'd taken a Dale Carnegie course, and I felt I just had to get out there and start talking. Standing up for 2 hours in front of a class helped me in learning to explain things.
Well, it's amazing how you've gone through market periods that are utterly different, and yet your basic rules about what to do remain unchanged.
Yeah, the rules work. They're not the easiest to apply. They won't tell you exactly when to buy or sell, obviously, but you'll never do anything stupid if you follow some fairly simple principles. When you get a chance to buy something of extraordinary value, whether it's a farm or an apartment house or a piece of a business or an entire business, the time to do it is then, and not worry about whether you could do it a little cheaper a month later or 2 months later.
Well, AI, the paradigmatic question for anybody who's ever written a piece of software is, what is the software that's controlling a human? Its ability to write symphonies, play chess, engage in social activity, read. Computers, we picked the that AI, we would define AI by certain sensory perception thing, primarily speech understanding and vision, and that those would be the frontier. Also chess playing, but that turned out to be really solvable, that is to be better than humans by brute force techniques. So that kind of got taken off about 15 years ago. But you're always wondering, when can I create a computer that could take, say, a textbook, read it, take the AP exam, and get a 5? And that's completely unsolved. So the most interesting, this guy Hilbert laid out 22 problems for mathematicians in 1900. If you think of the equivalent in software, problem number 1, that sort of subsumes most of the other problems, although there are things about simulating the environment that are also interesting. But anyway, problem number 1 is not solved. And so that's what you would work on. If your mind, from age, say, 11, is thinking about software and what can it do, what can it not do, and then you think you're really good at writing code, and then you meet somebody who's better, and you think, okay, now I'm really good, then you meet somebody who's better. By age 18, actually, you might be pretty good. So the rest of your life, you're going to think about the structure of the software that can do the equivalent of what a human can do. So I would definitely be drawn to that.
Now, the interesting thing that you'll notice if you analyze Bill Gates' stock portfolio is that Gates loves dividend stocks. Out of the 14 publicly traded stocks in his portfolio, 11 of them are dividend paying. Generally speaking, it's just a great sign from a company when they have excess cash flow that they can afford to pay out some of that to the shareholder. Ideally, they'd be both reinvesting some of their earnings in order to grow the business and paying some of their earnings as a dividend. When you look at Gates' portfolio, he does seem to be striking a good balance. Here, he owns the likes of Walmart stock, which pays a solid dividend of 1.75%. But Walmart is also using some of their earnings to reinvest in the business and expand into the likes of e-commerce and other things. Waste Management, that pays 55% of their earnings as a dividend, and the other 45% reinvesting in their business. UPS stock, it's the same story. Most of their earnings they pay as dividend, but still they are reinvesting in the business. Very important to strike the balance. The last sort of striking pattern that I noticed when analyzing Bill Gates was that he's a long-term investor. He doesn't buy a company, hold it for 2 or 3 years, and then sell it. What he does with his portfolio manager is he puts time and effort into buying high-quality businesses and then holding them for a long time. Bill Gates said, "We are long-term oriented, and I don't think that we understand the macroeconomics enough that we are making bets that are specific to that piece." He said, "I believe in the philosophy that Warren Buffett has put forth, and you can find great companies and invest in them, then the macroeconomics can go up and down, and the basic value of what you are holding onto there will be maintained throughout that." Basically what he's trying to say is he doesn't time the market, he just buys great quality businesses. And you can see that in the businesses that he owns. Berkshire Hathaway, the quality investing company. He's probably owned that for almost 30 years when he met Warren Buffett in 1991. Canadian National Railway is another example. A high quality business with a competitive advantage in which Gates has owned for a long period of time. He bought it back in the year 2000. His investing strategy is simple. Buy great quality businesses at an attractive price and hold them for the long term. And my philosophy has always been this: we need to study from the best of the best if we want to get good investing results. Don't just get advice from any ordinary guy, go to those who have actually been successful. With a net worth of $102 billion, there's no doubt that Gates is smart with money, and we have a lot to learn from him.